The National Housing Fund was established in 1992 by the administration of General Ibrahim Babangida to address some constraints to the mobilization of long-term funds for housing finance. It was also intended to ensure that every Nigerian has access to housing loans at affordable interest rates.
Housing, as we all know, is the single largest investment that families would have to do. Nobody can afford to buy a house outright, especially the masses. So we need to create that enabling environment to allow them buy this house and pay over a long period of time at a low interest rate.
Through participation and contribution of the NHF, it entitles all Nigerians above the age of 21 years in paid employment to a low interest rate government-funded loan. Members of the scheme contribute 2.5% of their monthly salary through the Federal Mortgage Bank. The fund is facilitated to the continuous flow of low-cost funds for long-term investment in housing. The fund is managed and administered by the Federal Mortgage Bank of Nigeria through wholesale lending to primary mortgage institutions, for and on lending for contributors of the fund as long-term housing loans. In other words, an individual who has contributed to the fund for at least 6 months can apply and obtain a loan through a duly licensed, operational, and qualified PMI institution of his choice and not directly from the FMBN. The maximum amount obtained under the NHF used to be 5 million naira, but has since increased to 15 million naira. The borrowed capital is repayable over a maximum of 30 years at the rate of 6% interest. According to the Federal Mortgage Bank, only 60,000 or 1.5% out of the 4 million registered contributors to the National Housing Fund have been able to access mortgage loans. As a result, although there are currently about 4 million Nigerians that are registered and are contributing to the fund, the FMBN has been able to provide mortgage loans to only about 60,000 contributors. This seemingly dismal number has created a negative image for the bank, as the public perceive the bank as not having effectively delivered on its mandate. The big question is, should primary mortgage banks help in the collection of National Housing Fund?
Yeah, it is only logical that mortgage banks should assist. In fact, if you ask mortgage banks to collect, you see more aggression in the collection, and I can assure you the collection will improve. Because mortgage banks will go all out, knowing that what you collect, you can make some minimal margin from, and they go all out to go and look for this money and collect it. I think it will be a very wise thing to do so that we can improve the collection on National Housing Fund.
Whoever is a contributor and we are collecting the monthly contributions, we also ensure that the same contributor, when he or she is a borrower, that the loan repayments are also collected on a monthly basis.
For now, I will say no, because when you say collection of money, this is public fund. By the time it goes to different organizations, sometimes the issue of accountability, the issue of having access to the money on time to use it, it's supposed to be a full of funds. If it comes to one single organization, as we've been enabled by the Act to collect it, we are supposed to account for it. If anything goes wrong, we're held accountable. But in the process of allowing other organizations to collect it, sometimes you may need the fund for mortgage financing and it's not readily available, either because of one thing or the other.
There have been bitter complaints by the primary mortgage institution operators on the conditions put forward by the Federal Mortgage Bank of Nigeria for accessing the fund.
Some of the process that are long and tedious shall be reduced, and advising them also to go on digital, because no longer is analog now. People are going digital, so we are expecting Federal Mortgage Bank to go digital as well, because that is the only way that it will now solve the problem and it will fast-track the process of this situation.
In December 2006, The Central Bank of Nigeria, which is the apex mortgage supervisory authority, unveiled a 10-point mortgage bank sector reform agenda. The target of this reform agenda is the re-engineering of the service of the primary mortgage institution and reposition it from sustainable economic growth and development. CBN in 2010 asked the 89 primary mortgage institutions in the country to recapitalize to 5 billion naira in an announcement that caused ripples in the industry. The Apex Bank explained that at the time that the idea of the state PMI was to promote the spread of mortgage firms across the 6 geopolitical zones to further embed the objective of financial inclusion, and that the national PMB will provide options for operators to remain in business at different authorization levels. Nigeria's socio-economic development does not support laxity in loan disbursement. It must be of great concern of FMBN to ensure access to loan to all categories of people. Their success and relevance should be based on their contribution to the housing stock. The current state of houses in Nigeria and deficit of the housing stock requires a 17 million housing units to satisfy the yearnings of Nigerians.